Thanks to Kerry and Gold Events for putting on the conference. Much appreciated to get an opportunity, and thanks everyone for your time today. That was a standard disclaimer that just whizzed by. Look, today I'm going to focus really on our Minari Dome project and just point out how our recent resource update, which came out about 6 weeks ago, has really created a transformational opportunity for the company. The resource increased by 250% and now stands at 1.8 million ounces of gold at a very healthy 1.6 grams per tonne gold, with that mineralisation starting from surface. 60% of that resource is in the indicated higher confidence category, and so that provides a very solid foundation for scoping studies that we'll talk about in due course. We achieved that increase at a very affordable rate. It was about $7.50 per ounce, so very economical. The project's located in the Paterson province in Western Australia. It's a Tier 1 gold-copper province, which has lately seen a lot of new endowment that I'll talk to. It's also located very proximal to Telfer's processing facility, which is very large scale and is rapidly running out of ore. Antipa is prioritising a standalone development study and has recently commenced a drill program with the objective of further increasing that significant resource base. The combined portfolio, however, we have is huge. It's 5,100 square kilometres in the province. It's made up dominantly of 4 large-scale complementary growth projects, including our flagship Minari Dome project that I've mentioned, but also we own 35% of the Citadel joint venture with Rio Tinto, exposing shareholders to a significant slice of both potential development opportunities and exploration upside on that project. We also have 2 very large farm-in projects covering more of this world-class geology. They provide advanced exploration optionality, and they are fully funded by our partners Newcrest and IGO Limited. Antipa has an EV of around $33 per gold equivalent attributable resource ounce. So compared to ASX listed gold project developers who range up to $240 an ounce, there's a potential opportunity there. The corporate snapshot, our market cap, well, as of Friday close, was $130 million. I haven't looked today, to be honest. And we had cash at the end of the March quarter of $9 million or thereabouts. So we're not come raise. We have a strong cornerstone to the register, collective holdings of 26%, 10% of that being Newcrest, our major shareholder, just under 5% with IGO, institutions at 7%, and then the directors and management about 4%. The Antipa board has 190 years collective experience, multiple greenfield discoveries, project development evaluations, mine commissioning and steady state production, multi-commodity and multi-jurisdiction. So if we just focus in on that Minari Dome project, first and foremost, the resource is now large scale. It has a very significant gold grade, and we have a number of additional growth opportunities which I'll talk to. The resource, we believe now, could deliver the potential for a standalone development opportunity, and so we've commenced a scoping study which is due for completion in the 3rd quarter of this calendar year. That will push us towards hopefully a pre-feasibility study. Of that 1.8 million ounce gold resource, around about 50% or just over 800,000 ounces sits within 275 metres of the surface within the open pittable regions, and 77% of that was classified as indicated resource. The 2 main deposits, Minyari and Winu, they're only about 600 metres apart, with Minyari hosting around about 87% of the resource, so a significant component. There are a number of small maiden resources which provide additional upside, which we'll be evaluating this year. Whilst gold is the dominant value driver here, metallurgical test work has confirmed that both copper and cobalt are readily extracted, and there's around about $1 billion worth of cobalt $1.2 billion worth of cobalt and $1 billion worth of copper in situ here. So they have the potential to materially impact or improve the project economics. These deposits are amenable to both open pit and potential underground development. In terms of the project location, it's in a province that's going through an exploration and mine development boom. Some of you may not be aware, but in the last 6 years, its endowments of 32 million ounces of gold and 16 million tonnes of 32 million ounces of gold and 3 million tonnes of copper has grown by an excess of a staggering 16 million ounces of gold and a further 3 million tonnes of copper. And they've all been discoveries under cover in that particular district. Includes Winu, Havieron, Calibre. Antipa has generated about 4.3 million ounces of that gold endowment increase. The Minari Dome Project is only 35 kilometres from Newcrest, Telfer, 22 million tonne per annum processing facility that runs out of ore in 2024. It's also within 50 k's of Greatland Gold Newcrest's 5.5 million ounce gold deposit and about 85 k's from Rio's Winu 5.9 million ounce, 2.5 million tonne copper deposit. So a lot of significant new discoveries in the region and a lot of mines, or a number of large-scale mines, being developed in the next several years. This is a long section view of the Minyari deposit. It shows the indicated and inferred resources, which are hosted by a thick breccia-style mineralisation system. Starts at surface. It's open at about 670 below surface. I've got an inset there of the position of the Havieron deposit, which sits at about 430 metres below the surface. That deposit generates 5.5 million ounces at around about 5,500 ounces per vertical metre. That's very high endowment. Minyari delivers 3,300 ounces per vertical metre, and both those numbers are very comparable to various deposits of De Grey's in the Hemi district. Minari is analogous to Havieron, so we'll be following the down plunge target, resource extension target, to determine a significant step change in the size of the resource. Our Minyari Dome project offers significant growth opportunities from a number of resource extensional targets. I've mentioned down plunge at Minyari, similarly at Waka, and then from extending the main resources, which are all open in most directions. Then we have a number of prospects and geophysical targets that we'll also be testing this calendar year. Last year we had multiple greenfield discoveries, Minyari South, Sundown, Waka West. They delivered the main resources I spoke of, but we also made further discoveries at GP01, Minyari North and Waka East, which will require follow-up this drill season. Again, they highlight the sort of mineral camp style situation that's going on here, multiple deposits in close proximity to each other. The plan for this year on the 100% project, the scoping study, will deliver that in the third quarter. That'll push us further towards the possible commencement of a pre-feasibility study as we advance towards a development decision on this project. In the meantime, we kicked off a drilling program last week to further grow that resource, particularly in the near surface or open pittable environment. However, there's a lot of additional assets that make up the Antipa portfolio. We've got those three large-scale projects. The total combined area of those projects is around about 5,000 square kilometres, so they're very, very large. We have huge partners in those projects, Rio Tinto, Newcrest and IGO. Huge partner combined exploration commitment of up to $115 million. And this district is providing huge Tier 1 discoveries over the last half a dozen years. On the Citadel project, Antipa currently owns 35% of this asset, with Rio Tinto owning the remaining 65%. So that exposes our shareholders to a significant slice of the upside on that project. That includes an evaluation of the potential to develop the Calibre deposit, which is a 2.1 million ounce gold deposit plus copper and silver, and also the significant potential for further greenfield discoveries on this particular project. Citadel already hosts 2.4 million ounces of gold, over 160,000 tonnes of copper, and 1.8 million ounces of silver. Antipa's 35% slice of that is around about 1.2 million gold equivalent ounces. Citadel JV comes to within 4 kilometres of Winu. Rio plan to build a processing facility out there and commence production in 2025. So it's a low-grade deposit at Winu, and the partners are now evaluating Calibre as a potential satellite feed to that processing facility. The Wilkie Farming Project, it's 2,200 square kilometres. Our partner there is Newcrest. The project comes to within 3 kilometres of Telfer, 9 kilometres of Havieron, and Newcrest need to spend $60 million to earn 75% interest in that particular project. Currently, Antipa still owns 100% of the project. The farming has a greenfield discovery focus, primarily for Havieron and Telfer analogues under shallow cover, looking for future feed for that very hungry Telfer plant. Now, the fourth and final project is our 1,550 square kilometre Patterson farming with IGO. This project comes to within 8 kilometres of Winu. It surrounds our 100% project on all 4 sides. And IGO need to spend $30 million to earn 70% in that particular asset. They also need to free carry Antipa to the completion of a bankable feasibility study on that project. Antipa currently still owns 100% of that asset. Again, the main focus of that particular farming is greenfield discovery, but on this occasion, Nifty and Winu analogue targets again under shallow target, and that's for copper discoveries for IGO's green strategy. So in wrapping up, Antipa is somewhat equivalent to 4 companies in one, and that's due to its first mover advantage in the region. So we're a major force in a region which is undergoing a significant exploration and mine development renaissance, and I can't honestly see any particular end to that period. There are several potential catalysts for a re-rate of the company's valuation. Once this bear market has settled, we're of the view that the upgraded Minari Dome resource can still deliver a significant value upgrade to the company. Meanwhile, a multi-bagger re-rate would hinge on the confirmation of a substantial standalone development opportunity on our 100% project. But keeping in mind, the current plan involves approximately $20 to $30 million of exploration expenditure, partners combined across that portfolio this year. So another serious Tier 1 discovery could come from that effort as well. Thanks everybody for your time. We're in booth 27. If you need more information, please by all means come around and have a chat. Thank you.